Hey, what's up, everybody? This is Justin. Welcome to this week's episode of Market Weekly with Meta One. I am here along with my co-host Fernando. Hey, Fernando, how are you today?
Great. Always excited to be here. Today, we're gonna start our podcast as usual, talking a little bit about the price movement of the market. So let's give it a go. If you guys watching today, if you saw our podcast last week, I was telling you that I was expecting probably a movement back to 21K or 23K. And then most likely we would start moving down one more time. And that's exactly what just happened. And I'm gonna show you why I came to that conclusion. And it is, it is strange how powerful this tool is when it comes to understanding, the direction of the market. So let me show you real quick. I'm going to use this tool called the Fibonacci retracement. So I went here to the newest low that we had, which was here around 18K. And then we went to our highest low here, which was about 25K. We do this. And we have, the Fibonacci retracement chart. So if we look deep, you can see my screen, right?
Yes.
Okay. Do you see this golden part? This two.
Yep.
Okay. This is called the golden pocket. This is where you expect an invalidation or validation of the market movement. So the most important areas to look at are the golden pocket and 38%. So 38% was 21K, and the golden pocket was a little bit below 23K. It's like 22,800. So I'm gonna zoom in. Do you see exactly how accurate this was? It touched here the golden pocket, and then immediately it went down.
That's incredible.
That's incredible. And for those of you who do not know what the Fibonacci retracement is, it's pretty much it is a tool we use for analysis that determines support levels and resistance. And this is based on a mathematical principle called the Fibonacci sequence. So the Fibonacci sequence is pretty much, okay, here is the explanation. It's a sequence in which each number is the sum of the two preceding numbers. So I'm gonna show you an example. Okay, this is it. Hold on. Let me use something simpler to understand. Okay, here you have it. So you have 1 and 1 equals 2. And then the sum of 2 and 1 is 3. And then the sum of 3 and 5 is 8. So this is a mathematical, a math principle that is reflected everywhere in the universe. And we use this principle when we're looking at charts to determine the price movement of the market. And it is super accurate. It's actually spooky how accurate it is sometimes. And that's exactly what I was using in order to anticipate what was going to happen this week, which is exactly what happened. And so we touched the support level here at 22.8K. And then let me show you something real quick about the Fibonacci retracement. Okay, so according to the Fib retracement principle, once you touch 61.88% on the Fib retracement, it is very likely that you're gonna touch the 38.2% and vice versa. So this means that pretty much if you touch this level, you're gonna touch this level then. Or it can also be, vice versa. If you touch 38%, 0.20, then you're gonna touch 65%. So this is exactly what happened here. We touched the golden pocket at 55%. It got invalidated. If it was not invalidated, if it was validated, then it would have most likely kept going up, and then we would have to make another Fibonacci retracement chart to see where it would be more likely to go again. But since it got invalidated, I'm sorry, we then rejected the chart, the price movement, and went all the way down to 38.2%. Once we arrived here, the price movement of the market got invalidated. So this means that it is very, 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 very unlikely that we're gonna go up. So if you would ask me, I personally believe that the chances of going up are like 5%, like it's almost inexistent.
Yeah.
So what this is telling me is that it is super likely that this was the last bear rally. This was the last, bullish movement before the final breakdown. So if you ask me, I feel that we are already moving on our way down. I feel like the next 3 weeks are gonna be a bloodbath. They're gonna be super negative, and we're gonna touch the bottom of the market in the next 3 weeks. And I truly believe this. I believe that after what happened today, because this actually happened today after the reporting of the CPI percentages, we got hit, and this candle invalidated, the golden pocket and the 38 level. So now what I'm expecting is in the next 3 weeks, we're gonna touch the bottom of the market. The bear market is gonna be over, and then we're gradually going to start reclaiming our price within like a year. We're not gonna go back to all-time highs, and we're not gonna be at 50K or 40K immediately. I think that it's gonna take like a year to go back to the 40K levels. And I feel like after this retracement, we're most likely gonna fall somewhere between 12K and 30K, 13K, I'm sorry. What do you think about that?
Yeah, well, I'm gonna have to say 4 weeks in a row, Fernando has been dead on, and it's just amazing to see the market volatility. I mean, we basically have had a 7% drop in BTC in less than 24 hours. And I agree with you. I think that it's going to be a bloodbath. I don't know if I would say as short as 3 weeks, but I would definitely agree that we're going to bottom here. I don't think that we're going to have another short squeeze or bear market rally. And I agree. I think it's going to take a long time to get back up to the levels that we've seen. I mean, if you think about it, when was it? I mean, was it I might be wrong, but I think it was November or October of last year. We were at 65K BTC, which is nuts.
Yeah.
And I agree with you. I think that we can see. I personally think we could touch 10K or possibly lower, and that's going to be the moment. That's going to be the moment to jump in if you want to diversify for sure. So yeah, it's amazing. It's really amazing to see and watch.
Yeah, well, the reason why I feel like it's gonna be within the next 3 weeks is because what we talked about in the last podcast, that the market cycles usually last 4 years, and from the top to the bottom is usually a year, and the market cycles are getting shorter. The first market cycle, it was like a year and 1 month. The second cycle, it was like a year, and I feel like this time it's gonna be 11 months, maybe 10 months. And I have this small chart here explaining the price movement from previous cycles. So on the first cycle, we had a drop of 82.6%. In the second cycle, we had a price drop of 86.9%. In the third market cycle, we had a movement of 83.6%. So what I'm gonna do is I'm gonna average these price movements. I'm gonna add, okay, 0.826 plus 0.869 plus 0.836 equals divided by 3. Okay, so I'm expecting, I'm using math to anticipate what might be, the drop of the market for this cycle, and that would be 84.8436% of the price of Bitcoin. So if we go back here to the highest point of the price of Bitcoin, we're gonna see that it was 69K. So I'm gonna use that price and divide it by 0.843. I'm sorry, hold on. I did that one wrong. Hold on. 4.3. What am I doing wrong? Okay, I'm sorry. I got my math is off right now. So 84% of 69K should bring us somewhere around 10K. And that's where I'm expecting the market
12-ish. Yeah,
12-ish, between 10 and 12K. So that's what I'm expecting the market to go on right now. And if we use if we take a look at the market here, just a second. Okay, and if I look for resistances and support levels, here's a resistance and a support level, and it's indicating to me that it's gonna be around 12K. So if any of the viewers right now are looking to buy Bitcoin or any other cryptocurrencies that are not Meta One, because Meta One is super stable, you don't have to worry about Meta One. I would recommend you to buy whenever you see the price of Bitcoin around here, which would be 12K. And yeah, I'm basing all my analysis on previous factors from the past. Like I said, on the previous cycles of crypto, the price of Bitcoin went down 82%, 86%, and 83%. So I'm expecting somewhere around these numbers to be, the price drop for Bitcoin, and an indicator to know when it's a good time to get back into the market.
Yeah. And it'll be interesting because we have so many geopolitical and financial factors happening right now that are unprecedented. So it's going to be interesting to watch to see how that impacts those unpredictable factors impact how low we go and how long we go low for. So I don't think that there's a question on the table that we're going to go low, and I don't think there's a question on the table that we probably are definitely not going to see another bear rally. It's just going to be a question of how low do we go and how long do we stay there for. But yeah, I totally agree with you, and I think it's about 11,440 to be exact, would be 84.3%. So that's the level we'll look for.
Sorry, my math was a little off.
No worries.
Yeah. There you go. You got the right number.
Yeah, cool, man. Well, yeah, this is amazing. Thank you for updating us. And yeah, so I know you wanted to talk a little later in the segment, I think second half, we'll talk a little bit about what I think fundamentally we're looking at is driving this market. Obviously, consumer price index coming out today was a big thing, that surprised the markets. But I know that you wanted to talk a little bit about Meta and where we're at with Meta first. And then I know you wanted to talk stable coins, which is perfect.
Yeah, absolutely. So first of all, I just wanted to mention to all of our viewers that the price of Meta One coin is as stable as ever. I think last week we had an all-time high of $380 per coin. Right now we dropped like $3. Right now we're like at $377. But yeah, I mean, Meta One is as stable as ever. It does not have the price movements of Bitcoin or Ethereum or all the other volatile crypto assets in the market. And the reason why is because the Meta One coin is a stable coin backed by a physical asset, which is gold. And that brings me to my next topic, which I want to talk about, which is stable coins. So right now, in a couple of days, I think in like 2 weeks, let me see if it said, okay, it's going to be the 29th of September. Binance is going to auto convert several stable coins from its exchange, which are USDC, USDP, and TUSD to BUSD. Sorry, I know this sounded a little bit confusing, but what this means is that Binance is going to remove several stable coins from its exchange in order to make the Binance USD their stable coin of preference. So before I dig in deeper into this subject, I want to talk a little bit about what a stable coin is. So a stable coin is usually a coin that the price does not move almost anything. Why? Because it's backed by a physical object. So in the case of Tether USD coin and Binance USD, these coins are backed by a physical asset, which is $1. So these coins never go up or down. They're always worth $1. And the reason why is because they're backed by a US dollar. Then we have other stable coins, like Terra USD or like this one, Trino USD, which these are algorithmic stable coins. So for those of you who have no idea what an algorithmic stable coin is, I would recommend you to stay as far away as possible from them. They're not backed by anything. They're backed by so it's terrible. I mean, they I'm sure you're aware of the Terra USD fiasco that happened with Terra Luna and all that, right? So so pretty much what this algorithmic stable coin means is that it is constantly trading against other coins and trying to reach a value of $1. But if the market gets manipulated, or if someone is lying about how much money there is invested in the company, someone can bring down the market cap of the asset. And pretty much what happened to Terra Classic can happen to that other algorithmic stable coin, like another one that I was talking about, which is one of the most popular ones, which is Neutrino USD. So we can see here on the Terra Classic USD, this is what happened. It was backed for $1 for a long time, and then I'm sorry, let me stop. I'm sorry about that. So yeah, I was showing you guys that the price of this algorithmic stablecoin was $1, and then some bad apples brought down the price of the Terra Luna coin. And since there was no money to back up how many Terra Classic USDT coins were printed, they went from $1 all the way to below 1 cent. Right now it's almost at 5 cents. But this is what I'm trying to get at, that it's not safe putting your money on a algorithmic stable coin, because it's not backed by anything. It's not backed by money. It's not backed by gold like Meta One coin. It's just backed by an algorithm that at any point might fail. If you look at this one, Trino USD, I didn't know. I just saw this. It looks like it's already failing. So it's supposed to be worth $1. and you can already see that, it had some peaks to 78 cents.
It's depegged. Yep.
Yeah, it's depegged, and right now it's 92 cents. So please, guys, if you're gonna invest in stable, well, it's not an investment. If you're gonna get out of the market to wait, for the market to be more stable, never do it under an algorithmic stable coin. Always do it under a US dollar backed stable coin, like either Tether, which is the coin we offer at Meta One, USD coin, which is the official coin of Coinbase, or Binance USD, which is the official coin of Binance. I would never touch any other dollar backed stable coin other than these three. Why? Because they're backed by major exchanges. Tether is backed by Bitfinex, USD coin is backed by Coinbase, and Binance USD is backed by Binance. So these companies are liquid. These companies are worth billions of dollars. So they're not gonna, nothing wrong is going to happen, most likely. And if you look at their market cap, these coins have, Tether has almost $70 billion worth of Tether. USD coin has 50 billion worth of their stable coin, and Binance USD has $20 billion worth of their stable coin. So they're very liquid stable coins, and chances that they go bankrupt or they have any liquidity issues are very, 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 very small. I actually wouldn't doubt in any of these three companies. And the reason why Binance is making the change from USDC, USDP, and TUSD, which are the following. Let me show you real quick. Okay, this is True USD, and this is USDP. These stable coins have a market cap of about $1 billion. So there's really no need to keep them under their exchange because they don't have a lot of liquidity. The only major stable coin that they are rejecting is the USDC, which is a stable coin from Coinbase. And the reason why they're doing this is because I feel like this is actually a very smart strategy, because they want to remove different stable coin options on their exchange, and they want to replace their main stable coin with the Binance USD. And they also have Tether USDT, which is the first dollar backed stable coin of the cryptocurrency market. And that's why I believe they did not remove the Tether USD coin, because it was just the one from Coinbase, and these other two, USDP and True USD. And yeah, I mean, I actually feel like it was like a financial strategy to take away the market from these three other coins and make users to be more reliant on the Binance USD, which, like I said, it is a very stable USD backed stable coin. They have a $20 billion market cap, and Binance is one of the most trusted exchanges in the planet, if not the most trusted one. So I think this was an excellent strategy from Binance. And yeah, that's pretty much oh, one more thing that I wanted to say. There's also gold backed stable coins like this one, which is Pax Gold, and the Meta One cryptocurrency. So with the gold backed stable coins, you don't have to worry about either about the price of the coin, depegging like with the algorithmic stable coins, because they're actually backed by a physical asset, which is gold. And that's
what makes Meta One a little bit different as well is, of course, our asset smart contracts. So you can't sell the coin below current asset value, which is something very unique. But yeah, I mean, I totally agree with you. I think that if you're choosing to exit the market, exit crypto altogether and move into fiat, which I don't like to do, but if you're doing that, then definitely use one of these USDT or USD backed coins. But if you're just looking to get out of the volatility of the market, check out Meta One, because it's definitely a place to be able to park your capital until you're ready to jump back into the market once we hit these lows here. But yeah, that's algorithmic stable coins. The minute that I heard about that concept, I was like, oh, this is going to go bad.
Yeah, that sounds scammy. That's the first thing that I saw. And sorry guys if I went too quick. Please use the comment section and let us know if you understood everything that I was talking about, or if I went too quick, or
Yeah.
if you have any doubts. Please use the comment section and let us know where which topics you would like for us to keep talking about, or if a topic was not 100% clear. Please let us know. We will be reading your comments, and we're gonna try to make sure that we talk more about topics that interest you.
Yeah, for sure. Please comment. We want to hear from you. Hit that subscribe button. It all helps others see our videos. And, we're just trying to get out good education here. The more that the better decisions that you can make. And you can hang out in this crazy, fun, amazing world of crypto. So thanks, Fernando. I'm kind of pivot back to what we were talking about before. So for everybody, the consumer price index came out today. This is the numbers for August. For everybody who doesn't know what a consumer price index is, it's basically the metric that shows where consumer prices are for different things like energy and goods and services and food and all of those things. So we had a CPI report this morning, and it is drastically affected both the traditional markets and also crypto markets. Like I mentioned, we've seen a 6.89% drop in Bitcoin, and then on the traditional market side, last time I looked, the Dow was down something like 2.5%. S&P 500 is down over 3. Yeah, there we go. So we're seeing the same thing. It's impacting, obviously, because what the CPI basically showed is everyone, except for, I don't know, I guess there were other people that were in my camp too. I would be interested to hear what you thought, Fernando, but everyone thought or believed, at least from what I was reading from a lot of commentary from mainstream sources, etc., that we were kind of going to see a little bit of a drop in the month-over-month CPI. And that we were going to kind of go in a nominally lower direction when it came to inflation. I believe the opposite, and that's what we got. I really thought that we were going to continue to see an uptick in inflation, and not because of really any economic data that gets put out. Honestly, just because of my experiences and talking to other people and their experiences. Everything from food to gas to electricity, it's all going up, and you can see it. So it's not easy. It's not hard to guess, even if you know nothing about macroeconomics, that we were going in that direction. I'm interested to hear from you, Fernando. What did you feel the same way, or do you think that we were going the opposite direction? Or
Absolutely. I mean, it is ridiculous to think that we are going to recover right now from whatever issue we have going on with inflation. And
yeah.
I know you and I have been talking about this since the beginning of the year. And the reason why is because we're already at the debt crust. The inflation is already too high, and the salaries of the people are already too low, that it is unsustainable.
Yes.
So like we were saying the other day, it doesn't matter if the government keeps printing money and all that, because how much a corporation can pay one of its employees is not enough. So the numbers are not adding up right now, and the economy is dead. I mean, the pretty much right now, the numbers are so out of place that it is not possible. It is not sustainable to keep going in the direction that we are, because we printed so much money that we did not have, and it cost inflation so much that let's use this as an example. I think that the minimum wage is like $8. Well, maybe not in California or in Florida, but like in Texas. I know that in Texas it's like $8. So let's say that you have a salary of the minimum wage of $8. That should be like what, like $1,200 a month, right? Somewhere
Yeah,
around that.
yeah,
Okay.
somewhere around that.
Okay, so take into consideration that, and then add inflation. So due to inflation now, a rent of a 1-bedroom apartment is like $1,000. So
Yeah,
with what you receive as a minimum wage, okay, you pay the rent for $1,000, and then you still have to pay for gasoline, you have to pay for food, you have to pay for electricity, you have to
yeah,
pay for everything else.
yep.
So it is not worth working anymore because you cannot survive. So if you cannot survive, then I think people, well, I don't actually think this. I already know for sure that people are preferring to just, be poor and eat in the streets or whatever, with government programs or all that stuff, instead of working. Because if you work, you're still poor, you don't have money to pay for your food, but you're not free, you're enslaved. And if you don't work, you're still poor, but you're not enslaved. So I mean, the numbers just don't add up. It is impossible for the economy to work now due to the high number of inflation. So I'm pretty sure that I mean, we're already in a recession. I mean, if we look at the numbers, it is already a given that we're in a recession. But I'm starting to believe that it is highly likely that we're going to fall into depression. The market is going to have to crash. Something terrible is going to have to happen so that we create a new set of rules to take the economy into the right direction one more time. But right now, I'm sorry to all the listeners, who are going to listen to what I'm going to say. But if you ask me, that I look at the market and, I do technical analysis and all that, the economy is dead. We already reached a point where inflation and the minimum salary does not add up. And, people are not going to consume, people are not going to work, people are not going to buy. And what's going to happen? The corporations are going to fall. If nobody buys your product, if nobody works your corporation, the corporation and the worker are one same entity. But we as well, maybe not we, because I don't own a company, but the CEOs, the government, all the people on top, they think that they're separate from the consumer and from the worker, but they're one same person. The corporation, the government does not work without the worker and the consumer, and the worker and the consumer does not work without the corporation. So we divided the corporation from the consumer, and it's going to collapse. Again, like I said, people are not going to work, people are not going to consume, and the corporations are not going to sell, and the corporations are not going to have people that work the companies. So what's going to happen? The economy is going to crash, and bailing out the companies with money is not going to help whatsoever, because still we have a problem with inflation, and people are not going to work, and people are not going to consume. So it's going to get super, super, if you ask me, my personal opinion, I feel like it's going to get super, 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 super bad before it gets better. But eventually it's going to get better.
Yeah, yeah. Well, I agree with you. I absolutely agree with you. I've been saying this for a long time. I think that this is not just what everybody, what mainstream thinks, that we're just kind of gonna beat this and the Fed's gonna help us and so on and so forth. I mean, that whole narrative is totally broken down. We have unprecedented amounts of geopolitical things happening in the world all at the same time. And we have this inflation problem, exactly, which we haven't seen, at least in America, since the 1970s with stagflation. And to your point about printing money, that I actually argue that makes the issue even worse, because that's what creates inflation in the first place.
Yeah.
So we have European governments bailing out their energy companies for trillions and trillions of dollars. We have Biden doing things like the student loan forgiveness, which is an enormous amount of money. We have Biden doing things like sending money to Ukraine every other day. And all of these things create more inflation. So the lunatic idea that the Federal Reserve is going to come along and do quantitative tightening and start reducing their balance sheet, and that all of a sudden we're going to be at 2% inflation, which is their goal, is nuts. Because in the beginning, they say inflation, the official number in the United States is something like, I don't know, 9% or something like that. And it's nuts. That's not what it really is. It's like 20% or more. And imagine what happens when the government keeps on printing money, when the governments of the world keep printing money. That's what happens, is we just have this massive, it's like pouring diesel and gasoline on a giant house fire. It just makes it worse.
I'm going to show you an example. So pretty much what's happening to the US dollar is exactly what happened to Terra Classic. Okay. So if we look at the price of one Terra Classic coin in like 6 months ago, the price of one of these coins was about $100, right?
Yep.
Okay, and the reason why the price of one of these coins was $100 was because of the following. Let me show you. So there was about, I would say about $1 billion, no, I'm sorry, about 1 billion Terra Luna coins in circulation. So that means that the price of Terra Luna was a reflection of how many coins there were in circulation. So when the Terra Luna fiasco happened, what they tried to do, they started printing a lot of Terra Luna coins out of thin air, just exactly as the government did.
Yep.
And look, so they went from 1 billion Terra Luna coins to 7 trillion Terra Luna coins. That's like a 100,000% inflation in 6 months. So far, does that make sense or not?
Oh yeah, totally.
Okay, so what happened since they increased the circulation supply of Terra Luna Classic from 1 billion to 7 trillion? This is what happened.
Yep.
The coin went from $100 to 0.0003 cents of the US dollar.
Yep.
So there's a lot of people out there who do not understand economy, and they feel like, okay, well, the price of Luna coin might go back to $100 one day. No, it will never go back to $100 one day. It will never even go back to $1 again. Why? It's because now there's a lot of coins in circulation. So let me explain this to you and all the viewers. So right now we have, I'm sorry, it was not trillions, it was billions. I'm sorry about that. So we have 6 billion coins in circulation, and the market cap is 2 billion. So in order for this coin to reach $1, it should have a market cap of, okay, 20 billion, 200, 2 trillion. Okay, so if this coin reaches $20 trillion worth of market cap, it would go back to $3. It has to reach a $20 trillion worth of market cap. $20 trillion. Bitcoin is worth 400 billion.
The entire cryptocurrency market is worth $1 trillion.
Exactly. So it is never going to happen. Never. Like, to all those Luna moon boys out there listening to this, it will never happen. It is not gonna happen. Why? Because of math. It is impossible for the price of this coin to go back to $100 because there's a lot more in circulation. So now, like I said, maximum we can expect maybe this coin to go back to a a market cap of, I don't know, 100 billion, and it would get the coin in like 1 cent or 2 cents. And that, for me, that's the maximum amount of the price that I can expect for Terra Classic. The other Terra Luna coin might go back to the all-time hates, because there's only about $100 million. I'm sorry, about 100 million coins in circulation, and that's how the price of an asset or a currency works. The less you have, the more likely it is to reach a higher value. But the more you have, it will. This is not like this is not something that is it could be. This is something that is real. This is mathematically likely to happen, that it will never go back to its previous value because there's too much in circulation. So my point, what I'm trying to get at from this, is that there's so much dollars in circulation right now. Just from 2020 to 2022, we printed 70% of all the US dollars in circulation. So the US dollar is never going to be worth back what it was in 2020. It is never, ever, ever going to be worth back what it was in the year 2000. It will never. Like, people need to understand this. Capitalism did not work. The rules of the US dollar did not work. Inflation, printing money did not work. They created a massive problem that has no solution. It literally has no solution. And the only way to fix this problem is by reinventing the wheel. We have to either fork Terra, just like Terra Classic did. We have to either fork the US dollar into a new US dollar with a different set of rules, and now understand that if we print too much money, the market is going to collapse, or we need to find out another solution. But it will never, if we keep on going through the same trajectory that we are right now, it will never, ever, ever, ever recover from value, because it is mathematically impossible. Why? Because inflation. You cannot expect to have something be worth the same that it was before, when there was only 100 million in circulation. Now that there's 7 billion in circulation, that's just how the economy works. I think that's that principle is called positional goods, that something is valuable just because a few amount of people own it, but when everyone owns it, it loses its value. That's just human psychology. I mean, I don't make the rules, but that's just how it works. But we have to take that into consideration when thinking about the direction of where the economy is heading to, and where the US dollar is heading to.
Yeah, absolutely. And that's exactly why we're doing what we're doing at Meta One. We're providing a solution to this problem, because there needs to be a replacement for fiat currencies that are inflationary. And that's what we're doing. That's one of the reasons why we're not a stable coin that just has an unlimited amount of max supply. We have minted 1 billion Meta One coins. There will never be 1,000,000,001 Meta One coins. And it's exactly what you're talking about. Actually, scarcity in something actually creates value, just like exactly what you're talking about here. And it's a perfect example, Terra Luna, and what's happening. So it's interesting to see where this is going to go. But I want everybody to know that there is solutions out there. Meta One is one solution. And take a hard look at what you're doing with your money and how you're managing it, because the US dollar, it's great. It's on a tear right now. It's strong, but that is an illusion, and it's going to fail very soon here. And the rest of the fiat currencies of the world are going to be along with it, because everything follows the US dollar, and everything is impacted by the US dollar. So one of the things that I found really interesting in the CPI numbers this month were was the food index. So the food index increased 11.4% over the last year, which is the largest 12-month increase since a period ending in May of 1979. Which that measures restaurants, those sorts of things. And then the food at home index rose even higher than that at 13.5%, which is the same largest 12-month increase since ending a period of March of 1979.
And that's what they reported, because those numbers are not real. The real number is a lot higher.
That's what they report. Yeah, you're exactly right. It's much higher than that. But what I found was interesting is that we have this big government. It's not just happening in the United States, but I'm just giving the US as an example of these governments now pushing this climate change agenda. And trust me, I'm all for Mother Earth. I've always been, and I always will be, but I don't think that the mainstream climate change narrative is really about saving the planet. I think it's about making money, and I think it's about another mechanism of control for the people. And we're starting to see that. We have a situation in California where California farmers are actually getting paid not to plant crops under the guise of, number one, basically conserving land. They want to put more and more acres of land into conservation plots. And second of all, because they have a drought happening, they want to stop the farmers from using so much water. And so they're doing things like paying them to not plant crops. But the problem that they don't understand is humans need to eat. And if we don't have the food production going on, what does that do? It increases prices of food. And so this, combined with major inflation, is having a huge impact on the price of food, which is crazy. And also what's happening too is that we have a situation where there are less truck drivers. There are we've had a supply chain crisis for a while, which is starting to finally even out after a while. But what ends up happening is we see things like this. Now, I don't know about in Mexico, but in the United States, the rail freight system is crucial to how goods and services and food get from one area of the country to another. And so we are right now at the precipice of potentially seeing 100,000 railroad worker strike starting on Friday because they cannot agree to terms of a new contract. Unfortunately, I'm really a pro-union guy. I've always been. I worked in an industry that was very strong unions, and I think they're really, really good. But unfortunately, we've moved so far away from that because we've moved towards, in the United States, a corporatocracy, supporting corporations and kind of letting them do whatever they want, that we're kind of in a situation again where we can't come to an agreement. These people work really hard. They just want to be paid fair wages. Can't come to agreement on that. And we are almost about to see potentially a nationwide railway strike, which will just increase food prices even more. So I just thought this was really interesting. There's just it just blows my mind how many unprecedented things are happening in the world. And as crazy as this time is, I think it's an amazing time to be alive. And I think the crash is going to be epic. It's going to be of grand proportions that we've never seen before. But what I'm really interested to see is, I feel that choice point, I call it, when we hit that bottom and we're at this place, like you said, where it's really that question of which way does humanity go? Do we choose to go in a different direction? Do we choose to rip off the chains of this control that this slave financial system has created and go in a different direction to create a new, abundant, peaceful, free reality? Or do we choose the same thing over and over again? And I think it's going to be really interesting to see in the next decade what direction humanity ends up going. And I truly hope it's the latter.
Yeah, me too.
But yeah, again, you know, we get super excited, and we've gone way over the time that we planned. So,
Yeah.
Fernando, do you have any closing words?
No, just would like to thank all of our viewers for being here. And again, just a reminder to click the subscribe button. And if you want us to talk about several topics, just type in something in the comment section. If you would like to talk about, I don't know, like hardware wallets, or if you would like to talk more about price movement or whatever, please drop a comment on the comment section to let us know. And yeah, thank you everyone for listening. And I hope to see you here next week.
Awesome. Yes. Thank you everybody for joining us today. We appreciate it. Hope you have a great rest of your week, and we'll see you next time. Bye-bye.